What's up, guys? Welcome back to the channel. Today I want to do an in-depth Wyckoff analysis with you guys and to give you a bit more insight in what I do, what I look for, and how you can use this in trading and investing. So let's get started. All right, so we are looking at the Eurocad weekly chart, and I know not everyone trades this pair, but it's very, very clean in terms of the price action. I trade this pair. It's a very profitable pair for me. And today I'm diving deeper into Wyckoff and analyzing this. Now, first of all, as you know, I trade around liquidity, and quick refresher, liquidity tends to be above swing highs and below swing lows, and also below ranges and above ranges. Now, to give you a few examples, this is a decent swing high, price runs into it and collapses. This is a decent swing low, price runs into it and goes up. Again, same thing happening here, and just happens over and over again. Here we have a range low, one touch, two touch, two touch, price runs into it and goes up. And yeah, it happens over and over again. It's a very powerful way of trading. Now, if we take a look at recent price action, this key swing low is essentially the spring of this entire accumulation range. This low is what started this entire up move. So that becomes a significant low to me. And look at what we're doing now. We broke the low and we close above violently. And that's very important. We have the same thing happening like we have here and like we had in all examples. This is a key swing high. We break it and we collapse down. And that's what I'm playing for in this particular area. Now, that's point number one, why this gives me a bullish bias. If we go to the daily time frame, this is a Wyckoff accumulation range. It's not a textbook one, but it is one. And you could say that the accumulation starts here, then we collapse down, and we have a clear change of character here, because look at this bullish rejection. We haven't seen that during this entire downtrend. Yes, it stopped here, but aggressive buying like this 2 weeks in a row, we haven't seen that yet. So that's why it's important. Then we break the low that formed there and we violently move up. And at this point, this is an accumulation range and I get a bullish bias. Now, unfortunately, I did not get my mechanical trading setup to go long in this particular pair. So that kind of sucks because the bias was so strong. Now, if we zoom in, we know that price. So this is your spring. This is your range. So it's a bit different, but this is the range. This is the V shape. And this confirms the accumulation phase. We also know that at the high end of the range, liquidity tends to stack up in those areas. And as you can see, as soon as we broke the high, we did see some rejection. What's interesting is that we went down to retest the origin of the up move, so the origin of the spring, and then we made a new high. That just tells me, that confirms that this is accumulation, because we know that prices like to break and retest, and especially like to retest the origin. And this is the origin. This is the last bit of resistance made before the impulsive move. And price tends to retest those areas and then move up, especially after confirmation that this is accumulation. So I do have bullish bias. I'm just waiting patiently for my entry setup to trigger. Now, if we go back, and if you're trading this pair, you might wonder, where on earth am I going to trade? Let's take a look at it. Now, if we take a look at this hourly time frame, you can see that over and over again, we have reaccumulation, we break the lows, and we do the exact same thing. Then we retest the move and we go up. Now here we form a swing low, price goes up, takes out the swing low, which confirms reaccumulation, and then we go up again. Now we are slightly falling down. So as we had previously, price likes to retest origins of moves. And that's why I like this area, because this is the origin of this up move. Yes, we have another one here, but I doubt that price is going down that far. And also we have this key swing low here. So what I would like to see is price going down, quick spike here, taking out this low, retesting the origin, and then giving me my entry setup to go long off. That's honestly the best thing that can happen. If the same thing happens at this particular area, so we break that swing low, and then we do the same thing, that would also be okay. This is the thing I want to see at these two levels. Hopefully that's clear. My painting isn't always the best. But that's what I want to see, and that lines up with my bullish bias. Now I trade mechanically, which means that regardless of location, context, I follow my setup. However, if it's in line with things like this, so first of all, we took out that low and we closed above, which to me indicates going long. That's confluence to me. And if I have a lot of confluence, like this daily accumulation, like retesting the origin, like staying bullish, etc., then I up my risk. I work with different tiers of risk, and depending on the confluence factors, I know that certain times my win rate goes up and the odds of succeeding increase. And during those times, I play with risk and I use tier 1, tier 2, or tier 3 in terms of risking. And that's an easy way to get more out of your trades and to reduce your drawdowns as well. So that's a bit of a tip right there. Now, if we are going to look at an other pair that I want to analyze with you. All right, so we're looking at platinum. And again, I've spoken about this before, and I know a lot of people don't trade this, but in terms of investing, fundamentally and technically, this is a great, great opportunity. I'm already invested in this. I'm in profits, but I do want to put in a Wyckoff analysis for you guys. Selling climax. It's your secondary test in phase B. This is your spring. Should be clear to anyone that trades Wyckoff. Reason, this is your selling climax because this is your extended down move. Clear change of character. Look at this move to the upside. We haven't seen it anywhere in this previous downtrend. We did see some retracements, but an aggressive up move like this one, we haven't seen that yet. So that confirms to me that this is something to pay attention to. Then we get this forming some equal lows, and this becomes the low of the range. We break it, which is possible in phase B, guys. A lot of people think that's not possible in phase B, but it is possible that we get a false break of the range already. I prefer not to. I would prefer that this didn't happen and that we just had a clean low, but again, it happens. Then we break the entire low, so we get all these unbroken lows in this area. Price runs into it and then quickly moves up. And that confirms to me accumulation ends at this point that we break structure, and my bullish bias kicks in. Now, if we dive deeper into what happened inside the range, and if we analyze the points of liquidity, we can see interesting price action again. Here in this intermediate low of the range, we got multiple touches, and as soon as the low breaks, we move to the other side of the range. As soon as the high breaks, we move to the other side of the range. Clean example, guys, of how I trade. This happens over and over and over again. If we get a false break at one side of the range, it moves to the other side, and then we get a false break here, and then it moves down again. And look at what happens here. We take out that high again, and we move to the low end of the range. We take out the low of the range, and we move to the high end of the range again. It happens over and over again, and especially on higher time frames, such as the daily time frame and the weekly time frame that I use for investing. This is just very, very clear. You can get a great bias in terms of where you want to be trading. And if we take a look at this spike, it took out 2 equal highs and then we fell down. Yes, this is in hindsight, but if you teach yourself to mark out these levels, so this one, and then when you see this range developing, and this one, and this key swing high, if you just mark those out and see how price reacts there, you can often see that you can get a bias. If this low breaks and we get a false break and move back above this low, above that level, I have a bullish bias. And then you can go to the lower time frames, or depending on how you trade, and find an entry. And then you know where to trade towards the other side of the range. Same thing, one quick example as well, like this one. If you get this, so a break below the level and a clean close above, at that point you have a bullish bias and you know where to aim for. So your only job is to get an entry, get your stop right, and manage risk. It can be very easy, guys. It can be very easy. Now, if we look at what happens right now, we took out this swing low, firm rejection there, and we have retested the origin of this up move. So it does kind of look bullish, but I'm not convinced yet. Reason being is we have a double bottom here, and price tends to take out a double bottom. So if this happens, then I'm convinced, all right, we're going to this high. For now, if I go to the lower time frames, look, we are ranging, and we did form a range here. We did take out the low of the range, and we now sort of in the middle of nowhere now. As long as we don't get a clean break above there, I'm not going long. So that's what I'm looking at right now in terms of Wyckoff. And this is just a clear example in terms of Wyckoff and liquidity, and a setup that I enjoy trading. Key swing low, as soon as this candle closes, I have a bullish bias. However, I don't actively trade this, so I wait for more to look out for in terms of investing. But if I was trading this, this would be a bullish bias. If I then get my setup, I up my risk, targeting the target I have, usually the high of the range, because that's how it works. So hopefully you guys enjoyed this video. You learned a bit more about Wyckoff and liquidity, and I speak to you in the next video. Thanks, guys.